Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here, WAM, John Sneisen, and it's convenient that we have a Norwegian here with us today to talk about this breaking news as Zero Hedge goes into Norway's $1 trillion wealth fund gains 3.2% in the third quarter. And as the article goes into, with global equity bubbles becoming ever more bubblier with each passing day, the bet on equities has paid off big league for Norway so far this year and grew their $1 trillion in AUM by another 3.2%, or a mere $32 billion in the third quarter of 2017 alone. So, John, I'm a little confused by this article, so can you go into it?
Well, this is all about the Norwegian Sovereign Wealth Fund called the Oil Fund. And what it does, it's supposed to keep all the money for the Norwegians for their pensions and everything that to take care of. They say they always do in Norwegian newspapers. This is how much money every single Norwegian have. Well, I don't think I'm ever going to see that money, to be honest with you, as a Norwegian citizen. But they promise that that money is X amount per citizen, and it's been growing rapidly, especially now with the massive portfolio that they have in equities, which is, as it said, 70% in the article from Zero Hedge. It's actually current as of 30th of September 2017. It's 65.9% that's invested, which is massive amount. Yeah. It's a huge bet. And when I went through, I did a lot of research the last 2 days just to make sure that I get the facts straight here. And I was looking at all the different holdings, and especially on the equity side, they own every single stock around the world. I saw they own about 0.67% out of Royal Bank of Canada. They own basically every big company in the world. They own everywhere from 0.02% up to 3% in some cases. All these massive corporations around the world. And the Norwegian oil fund, especially with the oil price being high back in the day, they just shoved in mass amounts of money into this fund in oil royalties that came through time. And I'll just show you some quick stats, what came in to the oil fund. It was from the period of 2000 to 2014. It was an average of 200 billion Norwegian kroner getting funneled into the fund from oil royalties. Now, of course, in 2008, there was a massive hike, which was 384 billion Norwegian krone that got shoved in, as they lost on an average 23.3%. They had a loss of 23.3%. So what they did is, to cover the loss, they shoved in a mass amounts of oil money from Statoil and Hydro, Norwegian Hydro as they're called, into the fund in order to cover that they lost mass amounts of money in the equities. Now the equities, they lost a substantial amount of money, which was 40.1% in equities, in their equity bet. And their equity bet at the time was about 50%. Now, of course, it's 15% more, and that's a substantial hike in risk that they're taking by going for a mass push into equities. And what is happening is that they have so much money they don't know where to put it, really. When you go and look into their investment, they're invested in every single stock almost at any major exchange around the world. Plus, of course, on the debt side, which is 31.6%, which is invested in both sovereign and business debt all around the world as well. Now, we are in a stock bubble. We're in a bond bubble all around the world. The stock markets has gone up forever, and bonds are record lows. I think we might be in for a slaughter. What usually happens is that when you have a crash in the stock market, interest rates just go straight through the roof. The problem is that I don't think very many people are gonna be able to survive this whole calamity that's coming. And it's gonna completely eviscerate most of the oil funds investments, because in 2008 the oil price was about $120 a barrel. Well, today it's under half of that. So where are they going to get their income? Because currently they're actually withdrawing more. I believe it was 101 billion Norwegian kroners was withdrawn into the Norwegian government just recently from the fund. Not a positive into the fund, it was a negative going out of the fund, and that's quite scary. And just looking at looking at the numbers, what happened in 2008, just to show you, was, of course, they made a tiny little bit amount of money, but the problem was they had that $384 billion that they shoved into the fund in oil royalties, and they were lucky because the dollar crashed against the Norwegian krona, so they had a lot of investments in US dollars. So what it meant is that the Norwegian krona became a lot more worth. So it actually boosted their investments that they had in US dollars all around the world. But
I just wanted to quickly go into this with you, John. So Yngve Slyngstad, he was trying to tell me how to pronounce it before. It's crazy spelling.
Pretty close.
People that start with a Y at the beginning of their names. Anyway, he's the CEO of Norges Bank Investment Management, which is part of the Norwegian Central Bank. And he said, and I wanted to get your take on what he said here, John, was that he says 60 to 70% in equities. Imagine it was 60 to 80 or 90%. The whole thing is that this fund is actually, to a large extent, now a public equity fund. We don't think about this as two separate asset classes that have their distinct dynamics. The real risk of the fund is in the equity market. So what do you think about what this guy has to say?
Yeah, well, he's saying that I think if they had 89% allocation into equities, and then he's saying that they're basically become a public equity fund, which is buying stocks. That's all they're holding. And then he says, well, think about what happened if it crashed, like if there's a crash in the equities market. There's a massive risk there that they're taking on this bet that they have this money. But what they also been doing is they've been helping stock markets worldwide, push up with boost of money that didn't, exist in other currencies. For example, you have the Swiss National Bank been buying mass amounts of U.S. stocks. So you have all these sovereign wealth funds, the central banks all around the world, like trying to help this market and push it further up. As we're kind of hitting a deflationary period where all the pensioners and everybody that holds stocks, the baby boomers, they are starting to liquidate their assets and getting out of them, and there's no buyers. So that's why these massive funds like the Norwegian Sovereign Wealth Fund and other sovereign wealth funds around the world are just going on a massive buying binge and are ending up with a huge substantial amount of risk for what's supposed to be the Norwegian pensioners' money.
Well, everything's completely manipulated, as we've gone into so many times here at WAM with the derivatives markets. The stock markets, as you mentioned, they're bubbling up and ready to burst, and this is a global issue. And what did Robert Kiyosaki say? Do not invest long-term in the stock market. Get your money into actual assets, etc. Don't put all your eggs into this basket because the schooling system tells you to.
Yeah. Well, and of course it comes to the regular financial advisor, which is really a salesperson. They have no clue about investing. They say, you got to invest in a well-diversified portfolio in equities. So it's just one asset class that you're diversified in, which is, it's terribly dangerous to be stuck in that one asset class. Now, I'm not saying it's terrible to invest in maybe some private companies that are not on the stock exchanges, because the private companies doesn't have that risk as a public exchange has, because they could have a massive sell-off. And meanwhile, while you have a private company doesn't have that risk of that massive sell-off in all stocks, because what could happen is they start to try to make up for the losses by selling a tremendous amount of stocks, and they just sell everything. It doesn't matter if it's tech stock or if it's a bio stock or if it's a mining, it just comes collapsing down in an instant. So when you had it private, you might not have that substantial risk because it's a private company that's held off of the exchange.
Yeah, absolutely. And this is, again, another example of why people have to be so much more financially responsible, because you brought in pensioners and, this risk that so many people, their pensions are completely at risk. It's scary. It's terrifying.
Yeah, and the Norwegian government are currently, as I said, I think it's about $101 billion that they withdrew last year in 2016 from the fund to fund the government.
Yeah, and there's
they have massive loss in oil royalties.
Yeah,
right?
And there's massive shortfalls. People need to learn how to diversify with that, which is decentralized. don't put all your eggs in one basket. Look at assets, look at commodities, gold, silver, and then Bitcoin, cryptocurrencies, etc. And don't, put all your, eggs into this massive basket that they call the stock exchange, where you could lose everything just like that and be like one of those bankers that jumps off a roof.
Yeah, and don't believe that the Sovereign Wealth Fund is going to, make sure that you are retiring comfortably down the road. Good luck with that. If you believe in these entities like the CPP here in Canada or
Canadian
other
Ponzi plan.
Yeah, Canada. Exactly, as I call it in my book. These funds, they are just created to accumulate mass amounts of money because the government believes that they have to do the work for you because they don't trust you that you can take care of yourself. People need to take care of themselves. They need to invest privately with their own money. There is risk to it, but there's massive risk with this too. So why don't you just take on your own risk and start educating yourself? And as you have a higher financial IQ, as Robert Kiyosaki says, well, you start understanding things and you start winning in investing and
winning bigly.
Winning bigly, right? And you start to accumulate assets. You start to protect your future and become a decently wealthy individual that could protect yourself against the coming, collapse of the equities market, all the debt that they're investing in. There's so many debt bubbles around the world. So there's mass amounts of risk.
The stock market, the monetary system, all these things that are coming crashing down.
And massive amounts of real estate markets around the world. And it's just a massive hyper bubble that the governments have created together with the central banks by lowering interest rates, making debt cheap. So everybody's flooding into debt, investing with it and creating these massive blown up asset classes all around the world. And of course, everything will come down. And when it comes down this time, I read a recent article, I think it was JP Morgan, one of the heads in JP Morgan said that this next crisis is going to be a massacre.
Absolutely it is. And the longer it's put off, the worse it's going to be. So people need to educate themselves and then take action and not depend on these Keynesians or, government or the media to tell them what to do. You have to understand these things for yourselves and stop relying on other people, because independence is survival and independence will save you. And a debt-based public, a debt-enslaved public is perfect for the banking and the government system and industry when people are in complete servitude to them. So closing it off, thanks for going into all this with us, John. And until next time, thanks for watching, everyone. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth, be the change. Thanks for watching, everyone. Check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so vastly demonetized by the Anti-Defamation League on YouTube as they flag all of our content as hate speech. You can also find our Bitcoin address in the description in the comments, as well as on the screen for you to scan if you please. You can also find me at Josh Sigurdson at steemit.com. That's steemit.com, the future of social media, as the dinosaur social media digs its own grave. You get paid in cryptocurrency, Steem that is, on steemit.com via the upvote of your posts. So I hope to see you there. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
Thank you.